Tech stocks bouncing back as dip buyers return to the battered AI trade. Joining us to discuss is Mandeep Singh of Bloomberg Intelligence. Mandeep, some stability in some important names as well, because Apple got caught up in this. Amazon did too. Are you seeing signs that maybe the worst of this is behind us?
Well, I think valuations, when you look at the software sector in general, were stretched prior to this drawdown. And, a company like Palantir trading at 80 times sales when Anthropic, which is growing, almost 10x in the past 12 months, you look at their private valuation, they were at a lower multiple. So some of those, I think, have corrected because of, what has happened. But there's no doubt that there is still uncertainty around how much of the CapEx increase is going to memory, which has really gone up so much because of the shortages, and how much is it for real capacity. And we don't know exactly, whether that 60% CapEx growth is going to translate into 50% plus additional capacity. And I think that's the concern in terms of how much are you going to get in terms of ROI and revenue growth versus how much is for component increases right now in that CapEx number.
Mandeep, to that point, do you think the regime has shifted? Do you think we're going to judge these companies differently? The metric is new, that the story of yesteryear is yesteryear, and that we're in a new place, a new phase?
Absolutely. Token consumption, for example, is a new metric. And look, the market always looks for long-term revenue visibility. That's what is missing in the software sector right now. So if you can show that revenue visibility through that token consumption metric or RPO or backlog, some of the new metrics that are more tied to consumption of AI, I think that's where your multiples are going to re-rate. But until then, you will be in that penalty box.